Today, we are going to talk about something that affects 45 million American households every single year: emergency loan rejection. If you have ever applied for a loan and gotten rejected, you are not alone. And more importantly, there are solutions. So stick around because by the end of this video, you will know exactly why you got rejected and what to do about it. Let's dive in. The thing about getting a loan in America: 93% of people who apply for emergency loans get rejected. That's not 30%. That's not 50%. That's 93% out of 100 people walking away with a no. And you might think, well, those people must have bad credit or something. But here's what you need to understand: most banks don't even look at you, they look at a number, your credit score. Here's how it works: you apply online, your information goes into a computer system. The system looks at one thing: your credit score. If your score is 620 or below, the computer says no. You never talk to a human. You never get to explain yourself. The algorithm just says no. That's the first problem. Banks aren't actually evaluating whether you can pay them back. They are just using an automated system with rigid cutoff. It doesn't matter if you have a stable job, have savings, have never missed a payment, or anything else. The algorithm doesn't know any of that. It just says credit score 580 and says rejected. That is why 93% of the people get turned down. It's not personal. It's not even human. It's just a computer program being inflexible. I'll give you the actual numbers because this is important. A 2026 study looked at 50,000 emergency loan applications across America. Here's what they found: overall rejection rate 93%. But here's where it gets worse based on your credit score. If your credit score is below 580, that's a 97% rejection rate. Basically, you are not getting approved. If your credit score is below 670, you are looking at 85 to 90% rejection. So, there's this critical threshold at 580. If you can get your score from 575 to 580, your approval odds actually triple. It's a huge jump. Now, why am I telling you this? Because it shows you something important. Different lenders have different threshold. Your bank might have a 620 minimum, but a credit union might have a 580 minimum. A fintech company might use completely different criteria. That has nothing to do with your credit score. So even though you get rejected by bank A, you might get approved by bank B, C, or D. That's the key insight here. Getting rejected once doesn't mean you can't borrow money. It just means you went to the wrong lender. So what happens to all these rejected people? The study found that 62% of them turn to payday lenders. Think about what that means. You get rejected by a normal bank, so you go to a payday lender in desperation. Here's the math. You borrow $500, the payday lender charges you $150 in fees. So you have to pay back $650 in 2 weeks. That's a 400% annual interest rate. Most people can't pay back $650 in 2 weeks. So they roll the loan over. Now they owe even more. By month 3, what started as a $500 problem has become a $1,200 problem. By month 6, you are trapped in a cycle that costs you thousands of dollars. And here's the really sad part: 40% of rejected borrowers never even try a second lender. They get rejected once. They think, if my bank of 10 years rejected me, nobody will approve me. And they just give up. They don't try a credit union. They don't try alternative lenders. They just stop. And then they are forced into payday lending or credit cards at 25% APR. That's the crisis we are talking about. Millions of people trapped in a cycle of rejection, desperation, and predatory lending. But here's the good news: there's a solution. I told you that applying to just 3 different lenders instead of one increases your approval odds by 340%. That means your approval chances go from 7% to about 35%. Why does this work? Because different lenders use completely different criteria. Your bank looks at credit score. That's basically it. Credit union looks at your transaction history, your deposits, whether you have been a customer, whether you get paychecks regularly. A fintech lender looks at your income patterns, your employment, stability, your banking behavior. A non-profit lending organization is literally designed to help people that the traditional banking system has rejected. So when you apply to your bank and get rejected, that doesn't mean you will be rejected by all of them. Your bank says no. The credit union says yes. That's one approval done. But most people stop at rejection number 1. They are in panic mode. They are stressed. They just take whatever predatory option is in front of them. The one who succeed, the one who applied to 3 different lenders even though you are scared. That's the 340% strategy. It's not magic. It's just not giving up after one no. So where do you actually apply? First, Credit Union PALS. PAL stands for Payday Alternative Loan. It's offered by most credit unions. The APR cap is 28%. That's it. No higher. You can borrow up to $2,000 and they often approve people with credit score as low as 580. Find a credit union near you at mycreditunion.gov. Second, CDFIs. CDFI stands for Community Development Financial Institution. These are non-profit lenders specifically created to serve people the traditional banking system has rejected. Rates are usually 15 to 30% APR and they want to lend to you. Find one at cdfifund.gov. Third, Fintech lenders. Companies like Upstart, Opportun, or Moneyline use AI and machine learning instead of just credit scores. They approve 45% to 55% of people even with low credit scores. And you get approved or rejected in 24 to 48 hours. Fourth, your employer. 52% of large employers now offer salary advances, though their HR department, zero interest, zero fees. Just ask your HR team. The strategy is simple. Don't apply to just one, apply to multiple lenders at the same time. One of them will say, yes. I have created a complete guide on my website at confidencebuilding.com. It has the exact scripts to use when you call these lenders. It has state by state data. It has everything you need. The link is in the description. Don't be one of the 42% who gives up after one rejection. You have got options. Thanks for watching.